Good evening. My name is Steve Larson, and I will be evaluating the cash flows at East Coast Yachts. Due to rapid growth, the company was reorganized as a corporation. The company is publicly traded under the symbol ECY. A contractor was hired to evaluate the short-term financial health of the company. Poor planning has caused prior growth to be somewhat hectic, and a cash flow analysis has been requested by the owner of East Coast Yacht. When doing a cash flow analysis, the first two things we need to look at are the income statement and the balance sheet. As you can see from the income statement, sales of East Coast Yachts are $611,582,000 with retained earnings of $28,544,100. If you look at the balance sheet will tell you the total assets that the company had in 2016 and 2017, as well as the total liabilities in 2016 and 2017. When doing a cash flow analysis, first thing we need to look at is the operating cash flow. As you can see, with the earnings before interest and taxes, as well as the depreciation and the current taxes owed, the operating cash flow for the company is almost $74 million. Diving deeper into those numbers, you see the cash flow to the stockholders is negative $46,809,000, and the cash flow paid to creditors is negative $6,399,100. So things don't look all that great for East Coast Yachts in the initial evaluation of their cash flow. If you look at the cash flow for East Coast Yachts in 2017, what you're looking at here is the financial statement of cash flows. Financial statement of cash flows shows that East Coast Yachts does not have a lot of cash on hand. So when we look at the other side of the coin, we want to look at the accounting statement of cash flows. So we look at the cash flows from operating activities. Cash flows that are generated from operating activities are almost $70 million. Then we want to look at cash flow from the investing activities that East Coast Yachts has participated in. If you look at the acquisition of fixed assets, East Coast Yachts has acquired almost $53 million in fixed assets. And between 2017 and 2016, they did not sell any of their fixed assets. So their cash flow from investing activities is $52,781,000. Then we look at their cash flow from financing activities. You want to look at the retirement of long-term debt, proceeds from that long-term debt, the dividends owed, repurchase of any stock that they bought back, and the proceeds from any new stock that was issued. If you look, the cash flow from any financing activities is actually negative $64,209,000. So if you look at the statement of cash flows between the cash flows, total cash flows from operations, total cash flow from investing activities, and the total cash flow from financing activities, you end up with a change in the balance sheet of $58,244,800. That being said, when you look at the difference between the two methods, one of the methods shows a highly positive number. So the accounting cash flow analysis, accounting statement of cash flows, shows a balance of $58 million, while the financial statement showed a negative of $46 million. I would describe East Coast cash flows as, depending on the balance on the sheet that you look at, not that great. East Coast Yachts does not have as much cash as they should in order to continue to operate a business that is at risk for going bankrupt. However, based on the financial statement, if you look at the accounting statement, then East Coast Yachts is in very good shape with $58,244,000. The cash flow statement that most accurately describes the cash flows of the company is the accounting statement, cash flow statement. That one has all of the cash flow values broken down into the different activities between operations, investing, and financing activities. In light of my previous answers, I would say that the expansion plans for East Coast Yachts should go ahead, but they should go ahead rather conservatively. They shouldn't get too outlandish. They can modestly increase their business and expand. However, looking at the balance sheet and making sure that they stay positive with their cash flow is going to be the most important thing in being successful in this new expansion. Thank you.